Hi, everybody, and welcome back to video number 3 in chapter 16. And when we left off, we were looking at transfers across departments. And I think it doesn't hurt to review this a little bit. Here, our journal entry moved work in process inventory from the roasting department into the blending department in sequential order. So if we look at the T accounts as far as units go, here we had our beginning inventory in roasting, and we started 90,000 units, subtotal of 120,000. 100,000 were transferred to blending. So that left us with 20,000 units in roasting ending inventory. And then the beginning inventory in blending was 12,000 units, and we transferred in from roasting 100,000 units, leaving us a subtotal of 112,000 units. We moved 97,000 units out of work in process inventory blending to finished goods inventory, leaving 15,000 units in ending inventory for blending. So if we put some money to this, based on our prior slides, we started with beginning inventory and roasting. We added direct material. We added some conversion for a total of 845,100. $762,000 was moved into roasting, leaving $83,100 in ending inventory. And so then, as we moved to blending, our beginning inventory in dollars was $151,688. We moved the $762,000 from roasting. We had direct materials of 102,000 and conversion costs of 402,952, subtotal of $1,418,640. We moved $1,262,940 into finished goods, leaving us $155,700 in blending. Okay, and you'll remember if I go back to review, we got those numbers from these calculations here. Okay. Now, we're going to take a look at the transfer to finished goods, and pretty much as you think it would be, we're moving $1,262,940 into finished goods inventory from work in process inventory blending. And that's to record the transfer of finally completed goods from roasting to blending to finished goods. So if we look at cost of goods sold, we had beginning finished goods inventory of $338,520. We added the cost of goods manufactured. That's this. And that gave us the cost of goods available for sale. Our ending finished goods inventory was $260,400, which means that we sold cost of goods sold $1,341,060. Okay. So if we bring these numbers up, we can check the journal entries for that. We're selling $1,915,100 on account for our sales, and our cost of goods sold here is $1,341,060, and the credit is to finished goods inventory to reduce that. Okay, pretty standard entries there. Now, if we look at financial statement reporting here, we have our sales and our cost of goods sold and our gross profit, pretty much straightforward there. And on inventories, though, our ending work in process inventory, ending raw materials inventory, and ending finished goods inventory. And that totals $546,950. And as this little asterisk indicates for raw materials here, we're taking the beginning raw materials inventory, we're adding the raw materials purchased, we're subtracting the materials requisitioned into work in process, and that leaves us with the $47,750. For work in process inventory, we start with the work in process roasting and work in process blending, and that's $83,100 plus $155,700. That gives us $238,800 as shown here. Okay, the cost per completed unit then can be calculated relatively easily by taking the cost of goods manufactured during this period. And you'll remember that is the cost of goods manufactured is here. Okay, and that cost of goods manufactured then can be divided by the number of units that were transferred to finished goods, which are shown here. Okay, and here's those two numbers. So our cost of goods manufactured, our cost per completed unit is $13.02. Okay, trends in process operations. Here we start with a process design based on what our customers want, whether it's services, etc. We set up continuous processing. We do some automation, potentially using robotics, and of course, try to keep our inventories minimized with just-in-time production. Okay, so if we illustrate a hybrid costing system and analyze process system yield, here a hybrid costing system contains the features of both process and job order operations. And it requires a hybrid costing system to determine the cost of products and services. Companies try to standardize processes while also meeting their customers' needs. It's important, of course, as we all would know, to monitor and control our costs. So if we look at an illustration here on a hybrid costing system and the associated yield, here we have our direct materials, and that excludes the wheels and sound equipment per car. Then we have our conversion costs, and then our assembly process cost would be the sum of those two. And the customer gets a choice of what wheel types they want to use. And they vary from $240, $330, and $480. Customer gets some choice of sound system too, and they vary from $620 to $840 to $1,360. So we're going to take a yield, and our non-defective units produced is 9,900 units, and the units that could have been produced is 10,000 units, or a 99% yield. Don't think of this too awfully negatively. most manufacturing companies, if not all manufacturing companies, have some sort of yield that is not 100%. All right, now, if we compute the process activity costs and prepare a production costs report, this time using FIFO. And we're going to follow the 4 steps to demonstrate the process costing using the FIFO method. And here, first, we will determine the physical flow. Second, compute the equivalent units of production. Third, compute the cost per equivalent unit of production. And finally, assign and reconcile costs like we've done previously. So here, same example, we have beginning work in process inventory, units started during the period, units completed and transferred out, and ending work in process inventory. Same numbers we've been using in this PowerPoint. So the units to account for, in this case, is 120 units, the 30,000 units plus the 90,000 units. Now these are units, not dollars, as you would know. And so the units started and completed, we're going to have completed and transferred out minus the beginning work in process inventory here. A little bit different. So here's our 30,000 units. And so the units started and completed is going to be 70,000 units. Okay. Now, here's our beginning work in process. The units started and completed, 70,000, and the ending work in process, 20,000. So the units accounted for 120,000 units. So if we look at that, here's our 120,000 units, beginning work in process plus the units started. But the units accounted for, we started with our 30,000 beginning work in process. We added the 70,000 units that were started and completed, and our ending work in process, 20,000 units. And it reconciles, as you can see. Now, we look at our percent complete. Our beginning work in process was 100% complete with respect to direct materials, here and here. And conversion costs were 65% complete in beginning work in process, 100% that was completed during the period, and then our ending work in process was 25%. So our equivalent units of production is going to be the number of equivalent units needed to complete beginning work in process, plus the number of whole units started and completed and transferred out, plus the number of equivalent units in ending work in process. Okay, that is a little bit different. So be sure you kind of think that through, how that's working for FIFO. Okay, so I'll go through it again just to be sure you've got it. The number of equivalent units needed to complete beginning work in process. And then the number of units started and completed and transferred out. And then the number of equivalent units in ending work in process. Okay. Now, if I look at the units here, here, and here that we just did, we're going to have percent added for direct materials. That'll be 100%. So that's going to be 90,000 equivalent units of production. And then we'll take the 65% subtracted from 100% to get the percent added during production, or 35% of this 30,000. 100% of started and completed, and finally 25% of our ending work in process. That looks like a good place to stop this video. And when we return, we'll complete the FIFO illustration.